What's up, everybody? It's Matt Faircloth. Thank you so much for watching our YouTube channel from the DeRosa Group. Please, 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 if you can take a minute and check out my book, Raising Private Capital. You can get it in Bigger Pockets by going to biggerpockets.com/store and enter the coupon code LIVEPRIVATEMONEY to get 20% off of the book. It's Raising Private Capital. And today we're going to talk about exactly raising private capital, because we're going to talk about how you can tap into the $9 trillion pool of money that's out there. 9 trillion with a T, like that. $9 trillion is available for us, all of us, to put to work in our real estate business. What? Well, I'm here to bring in my friend Dan Krasinowski from Rocket Dollar, who's going to talk to us about that $9 trillion, where it is, how to unlock it, and how Rocket Dollar can help do that. So, Dan, thank you so much for taking the time with me today.
Awesome, Matt. Great to see you. Great to be here today. And yes, I didn't share before, but I did pick up a copy of your book.
Oh, yeah.
And I love it. I promise. Not a plug here, but this is good stuff. So,
I did not know you were going to do that. Well done. Thank you. Thank you. Not a plant. I did not send Dan that book. Thank you very much for pulling it out, Dan. I appreciate you. So, Dan, there's as you said before, like it's hard to figure 9 trillion of anything, right? Like, I mean, like if I were to picture like 9 trillion pennies stacked up here in my office, it wouldn't fit in the building that I'm in, right? So $9 trillion sounds like an astronomical, almost unfathomable amount of money. But the bottom line is that it's there. And so where is it?
It is. And, you know, when I first heard the number, I had a good chuckle, because outside of our national debt, there's really no number out there that's that big until you realize the summation of all of our retirement accounts. So think of your 401k or old 401k, you know, is actually double-digit trillions. But when folks talk of IRAs, individual retirement accounts, this number is over $9 trillion, as you said, with a T, and growing. You know, it's possible it could hit 10 trillion in 2020 or so.
That's crazy.
It is.
What's the difference? You talked about an IRA, and folks that are just watching, like, well, I have a retirement account. My company gives me one. They do a company match and everything like that. So that's a 401k, right? If I work for a company and they give me a retirement account, that's a 401k. What is an IRA, and how's it different?
Yeah, I mean, the best way to think of it, a lot of us have been through a few jobs here in our career and probably naturally opted into the 401k. So, you know, the best way is say your current job 401k, call that your 401k. And why I say that is you really can't touch that money till you're in your late 50s or till you leave your employer. That said, with our generation and in modern times, most folks probably have 2, 3, 4, even 5 old 401ks, which are classified better as IRA. So take a very vanilla example, somebody that used to work for Merrill Lynch or General Electric, had some provider, all that money has rolled into Fidelity. So if they really read the fine print, it's probably called a rollover IRA.
Okay, so it's a former, it was a 401k. They don't work there anymore, and now it can be an IRA, and it can be done. And so there's 9 trillion in IRAs right now in America, not 401ks, in IRAs. Where is it right now? Like we'll get to how do we get to it, yeah. But it's floating around in the universe. Where is most of it?
Yeah, you know, I think most of it's, you know, the likes of a Fidelity, a Schwab, a Vanguard fund. That said, though, it is comical, you know, folks that had a job in their early 20s, the company probably flipped over. They probably haven't received a statement in 20 years. So, you know, it is possible that there's, you know, up to $1 trillion out there that's truly forgotten that folks aren't going to realize till they come to it in their 60s. And, you know, they better hope that XYZ, you know, triple bear or triple bill mutual fund is actually paying off.
Yeah. So that they're not even aware of it. It might just be out there, the IRA from the company they used to work for. But you're saying is most of it is in mutual funds and probably in the same assets that it was when they were working for the company and everything like that, right?
Yeah, it's real similar. I mean, it's kind of day one of a job. You see 10 choices. Most people say, fine, 10%, 10%, 10%.
Yeah, spread across the board.
You know, likewise, they're probably going to say, yeah, little stocks, little bonds, or the typical 60-40. You know, that's kind of a set it and forget it.
And then when you leave the company, it just stays in those assets until they move them into something else, right?
Generally speaking, I mean, you know, different plans may force you to move, but a lot of times, you know, oddly enough, think of if you worked at 4 companies, your 401ks, which once again are now truly IRAs, are probably sitting at a Fidelity or somewhere similar. You're just going to push it in there, click on autopilot. And the folks that did that, I mean, I said there's some good times in the market, some not so good times. The folks that did that in the 90s and the 2000s, we're kind of in for a rude surprise as they hit 2008. So, it's probably not best for full diversification.
Absolutely. So, but it's there, right? They've even forgotten about it. They said, I'll worry about that when I turn 65 or whatever it is. But the bottom line is these people have a lot more options than what that mutual fund could offer them, correct? I mean, and I know they do, they do, but for folks that don't know that, what else could they be doing with that money? Like what else is available with an IRA?
Yeah, I mean, literally it's anything they would do with your piggy bank checking account. So there are one or two minor exceptions, but I mean, generally speaking, folks that diversify, you can even reference some of your high net worth folks. Trust me, they're not strictly in stocks, bonds, mutual funds. They're in some real estate plays, something as simple as renting a few duplexes, renting them out to folks, maybe a commercial property, a niche like self-storage. That's a very strong percentage of this 9 trillion, or let me step back, of the money that could become part of the 9 trillion in the future. A majority of this little piece is in real estate.
Yeah.
You're going to get a situation where it's your friend's company. The nice thing now, particularly for some of the younger folks there, maybe with the smaller retirement balance, is in the different crowdfunding campaigns where an individual investment could be as low as, say, $500. So it's spread out, but lo and behold, I mean, real estate is still where you see a lot of this money.
Yeah. Right. So it can be but it's in stocks, but they can invest in real estate. I have a friend who owns a horse in his IRA.
Yeah.
Because that can be done. You can, what?
As long as it's not a collectible horse, it's okay. So, the one thing that I would want to clear up, some folks think that, they can magically tap their IRA for their own company. So I'd say there's 2 or 3 exceptions. The one main one, though, is that you cannot invest in your own company or invest in a property that, say, you or somebody in your linear family, your parents or children would stay in. Otherwise, everything else is fair game. I know for a lot of the Philly folks here, you're going to buy a nice flat on South Street, have some med school students live here. That's a dynamite investment for a retirement portfolio.
They could do all that, but they can't go and they couldn't do that and then live there long term on their own.
That's true.
That would be benefiting personally from it. The bottom line that I've heard is as long as you don't personally benefit from it, number one, so you can't take a management fee yourself, or you can't buy a property from yourself or use it personally. And you also can't use the retirement account of anybody directly above or directly below you in your family tree. So your mom, your dad, your grandparents, your great-grandparents, your kids, your grandkids, your great-grandkids, or their spouses, correct?
That's correct. But oddly enough, in-laws are not considered in there. So, I guess the government assumes you're not going to give a sweetheart deal to, your mother-in-law or father-in-law. So, oh well.
Really? That's weird. So I can't do my wife's IRA. I can't do anything with my father. What about my stepmom?
Let me check on when you get into,
I'm just getting technicality on you, but I've done IRA deals with my sister, like or my cousin or my uncle or whatever. You can do them directly outside the up and down family lineage, but I just tell people if they're above you or below you in the family tree, you can't work with them.
Funny how the brother and sister are not, part of the direct lineage. So you do see a lot of sister investments.
So to get this money out of, so let's say I encounter my Aunt Sally or a friend of mine I went to high school with, whatever, and they got a significant money in their retirement account. They want to do something different outside of Wall Street to diversify themselves, right? Mm-hmm. So what do I do now that this person's like they've expressed interest? How do I explain what's possible to them, and then how do I get them to convert it? So what's the conversation look like, and then after that, what's the actions behind the conversation?
Yeah, I mean, the biggest thing is just the empowerment. So, I love how you mentioned your friend and Aunt Sally. Let's just take Aunt Sally first. She's worked in a few corporate jobs. If you with Aunt Sally at the Thanksgiving dinner table, hey, Aunt Sally, do you know you can use your retirement dollars in my buddy's real estate project in Center City, Philly?
Yep.
She's going to share a lot of excitement. So first, she's excited about real estate. She's been investing in this for a while. She loves Philly, of course, and she just wasn't made aware how easy it could be to roll, let's assume she has money with Fidelity, into, say, a self-directed IRA, have checkbook control, so just like she would with her normal checking account, and then write a check and keep all of the tax benefits, so the pre-tax benefits that she had previously. Now, let's say you turn around the table, you're talking to your buddy who's a one-off doctor. He obviously wants to defer as much taxes as possible for as long as possible. He has the opportunity, being self-employed, to open a solo 401k, and he can not only roll over, say, some of his old retirement accounts, he can actually contribute and salary defer up to $56,000 a year, and then move that into this real estate deal, grow tax-free for the next 2, 3, 4 decades, and then have a very sizable retirement on the back end.
That's great. So then, I've got that conversation about possibility. Did you know that you can do something way different than what your Fidelity or what your retirement account provider can do? Here's what it looks like. I've talked to people saying, hey, listen, wouldn't you love to be able to drive past your retirement account every morning on your way to work, right? It's sitting in that apartment building right there. We did a deal with some retirement accounts that involved buying a winery, right? Wouldn't you love to enjoy the fruits of your retirement account with a bottle of wine? It's sitting right there in front of you. And I get your retirement account can own stocks of Microsoft and stuff like that, can own those things too. I got it. But it's way less tangible than saying that apartment building that I can reach out and touch and smack the bricks on it. My retirement account's in there. And it's less volatile, I think, too, personally. And that has to do with personal opinions on the stock market and everything like that. But so that's all great. Are there any other rules that people need to know about self-directed IRAs and how to unlock them, or anything that people should be aware of? And then that.
No, I mean, the primary one is self-dealing that we talked about. The other two are no life insurance or no collectible. So you can't go out and buy a collectible car, Air Jordans, everything.
By artwork, correct?
If it's securitized, yeah, it's a possibility.
Okay.
A lot of folks, though, I love your example. I grew up in Scranton, PA, and I won't mention names, but there are a few people, our families, that tend to have their hands in a lot of things. So the nice thing is, for Joe and Jay in America out here, whether you have $1 million, $100K, or even $10,000, you can have this diversified portfolio to say, here's my commercial building, here's my winery, here's my restaurant, here's maybe another company I invested in. And
the dollar amount, it's not like, well, okay, you can only do, I'm not going to drop the other, the people might be waiting for me to say, and this is only available if you've got over $1 million left in your retirement account, or if you're an accredited investor, or if your last name is a certain last name, or whatever it is. No, you can do that. Anyone with a retirement account can leverage self-directed IRAs by investing in a retirement account in something outside of Wall Street by diversifying. And that. So you mentioned one more thing. Tell me about a checkbook IRA. What's that? Because that's different than some other options that are out there where you've got this third-party custodian that's handling the money that you've got. And I syndicate a lot of real estate deals, and sometimes it's tough to deal with those third-party companies because they've got bureaucratic approval processes, and it takes a while to get the money released and stuff. So what's a checkbook IRA, and how does it work?
Yeah, so I mean, it's pretty straight. I mean, checkbook IRA, as it sounds, it is a checkbook account. So an analogy for folks that are familiar with a health savings account, with your HSA, you have a checkbook, you need it for surgery, great. You get a mani-pedi, do something else, not allowed. We talked about what's not allowed in these accounts. What's great about the checkbook IRA, regardless if you're in the self-directed IRA or the solo 401k, your money literally sits at a bank. We never hold your money. It sits in an FDIC insured bank that you, at any time, you can write a check, ACH, or wire money. It's extremely powerful. And we folks not only appreciate this, we're starting to see culturally, folks are demanding this. So historically, a brief background, I mean, SDIRAs have been around since the 70s, solo 401ks for just under 20 years. A lot of the other custodians out there, their model is to basically intake your money, give you a lot of forms. It's very heavy on the scanning and fax. So why, of this astronomical trillion number, why is it just over 100 billion that has been in these accounts? Some of it's just been the hassle to get the account set up, managing. Whereas at a company such as Rocket Dollar, I'm associated with, it's a quick and easy, 5 minutes to sign up online, e-sign a few forms. Lo and behold, here's your money. Roll over your money, tax penalty free, keep all the benefits, and then invest in what you want when you want. It really is that simple.
And can the IRA owner pick what bank account they want to put it in, or does it have to be an account that's associated with you guys?
Yeah, I mean, I think out of fairness for our folks, we've talked to dozens of financial institutions, and I've found a few partner ones that, as I said, who we deal with now, no minimum balance,
That's what you want.
no fees for checks, ACH, a very reasonable wire fee if
And
necessary.
these are big national brands that people can access wherever they are and everything like that.
Yeah, and I mean, everything's FDIC insured. So the best, as I said, once again, just like is FDIC insured, same deal here.
How does it work for if they've got, like, let's say they invest their money in an apartment building, right? Apartment building starts spinning off dividends. The dividends get mailed to them. Does it go to you guys? Does it go directly to the bank? And are they allowed to deposit the money right into the bank on their own?
Yeah, I mean, the cool thing is your money, let's just say you invested $100,000, a 10% dividend. As that $10,000 comes back in, it goes right back into your bank account. Being that you have a checking account, you can turn around and maybe invest in a different property, or say, hey, I like these crowdfunding. I like the winery that says I can invest for $1,000, or I can even give my buddy a peer-to-peer loan. Once again, it's pretty much limitless options of what you can invest or do with your money. So you just like you would your normal piggy bank checking account, keep that money in use.
That's great. That's great. Now you're wearing a no tax shirt. I love that shirt. I think a lot of people watching would love that shirt too. Tell us about what's behind that shirt.
Yeah, well, behind the shirt is literally, it says more money faster. So I won't shift around on you here, but I will talk about both sides. Why we pertain to no taxes, that most folks are unaware that they can leverage their retirement dollars, the $9 trillion that we talked about, their stake of it, to grow tax-free, or if they are already in a Roth, a post-tax account, to invest in something where on the back end there's no taxes. So let's just say, using our real estate example before, 100,000 went into real estate. Say this is a Roth account, the 10,000 dividend, I then put in a startup, and this goes 100x. Well, that 10,000 times 100, when it hits $1 million on the back end, guess what? You're not paying taxes in your 60s. Pretty powerful.
Insane.
What's literally behind it is more money faster, or as we like to say, 6 figures in 6 minutes. So going back to, our Thanksgiving example, as you share with your Aunt Sally and your friend to say, hey, here's a piece of real estate I think you can use your retirement dollars for, the person who is raising money, maybe called the syndicator, the deal sponsor, et cetera, they are literally going to get more money faster. As we see it, 6 figures in 6 minutes, from something as simple as a comment on the dinner table or sending a brief email. I have a buddy here in Austin, Tommy Prate, and he's been doing this for years, and 20% of his money, comes from self-directed accounts.
Yeah. I would say almost 50% of the money of the deals that we do come from self-directed accounts. And a lot of my book, Raising Private Capital, talks about how to locate the equation to locate private money, self-directed IRA money in your network, how to utilize it, deals that really work really well for self-directed IRAs, deals that don't, and how to completely manifest it and leverage it for yourself. I love that you guys have the checkbook account, because I've dealt with other IRA custodians that take literally months to release money. I love that you guys are giving the control to the IRA holder. I have reviewed your fees. Your fees are super, super reasonable. So if people want to hear more about Rocket Dollar and about you, and about they want to connect with you, how do they get a hold of you and your company?
Sure. Easy is just rocketdollar.com. My email is dan@rocketdollar.com. Happy to speak myself, my team, and we've been in the space for well over a decade, both at having these accounts as investors and also raising money. So folks that are raising money or the individual investor can also reach out to me.
Yeah. Okay. So dan@rocketdollar.com. Just go to rocketdollar.com to hear more about it. I'm a big fan. You've helped out some folks that invest with me as well, and I love that you guys are really looking to change the game in the self-directed IRA space. So I just want to take a minute to thank you. Guys, please check out Rocket Dollar. There'll be some stuff in the show notes down below if you want to learn more and everything like that. And listen, IRAs are an absolutely untapped resource, guys. There is so much money out there. So little of it is involved in real estate right now, and you guys all know someone who has a retirement account that's willing to put it to work in something else outside of Wall Street, something they could touch and feel and invest in someone that they believe in, which is you. Okay, cool. Dan, thank you very much. And guys, thank you for watching, and have a great and profitable week.
Thanks, Matt.